And we are live with another episode of Daily Market Mastery. This is episode number 8, and today we're going to take a closer look at Ford. For those of you that are new to the series, don't forget to check out probably episode number 1, but I'm also going to provide a quick summary what it's all about so you know what you can expect. First of all, outside of episode number 1 that dives a little bit deeper or actually provides a better overview over the trading strategy that I'm using called Elliott Wave Principle or Elliott Wave Theory, all other episodes are aiming towards the 20 to 30 minutes mark. And for that, we're actually gonna use a timer to make sure that it just doesn't get too long and too much information. Second of all, as already mentioned, in this stream, I'm using Elliott Wave Theory or Elliott Wave Principle, which is something that you can check out by using the link in the video description down below to analyze or forecast stock prices, stock movements, and movements of indices that I'm invested in my eToro popular investor portfolio. That's also linked in the pinned chat message and in the description down below. And third of all, so that's pretty much what we're doing here. The first couple of episodes were kind of like getting started and catching up. So in terms of like analyzing positions that I'm already invested in, we looked at the Standard & Poor's 500, at the Nasdaq 100, we looked at Shopify, we looked at Black Knight Inc., and today we're going to look at Ford. And once we're done with Ford, we tomorrow probably going to look at GameStop, although their Elliott Wave Theory doesn't apply that well anymore because Elliott Wave Theory relies a lot on mass psychology. And as such, in a stock that behaves completely different because, for example, a lot of the shares have been directly registered, which hasn't happened before in that extent, or I mean, it has happened, but in very, very rare occasions. So that's why I don't expect to get a super great forecast for the Elliott Wave Theory, but we might still look at it. And after that, we're going to pick new stocks to look at to basically decide, okay, where I'm going to invest or cut my positions or what I might be shorting. Anyway, so that's it, the first part. Now, as always, don't forget, there's a disclaimer at the bottom. Everything that I'm sharing in this live stream or video, if you're watching it later, reflects my personal opinion and is in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Just because I decide to invest into something or not invest into something doesn't mean that you have to do the same. I'm just sharing why I'm doing things, doesn't mean that it's right. Yeah. That said, so got the disclaimer out of the way, but now I actually have a checklist that I go through in to make sure to cover all the legal aspects and everything and get you all the information that you need. Almost forgot, so as mentioned, there's a book about Elliott Wave Theory and you can read it online for free. There is a link in the description down below so you can follow along online when we reference pages or chapters in the book. And I'm quickly going to switch there, wrong button. Actually want to switch to the desk cam, that one here. And there's also a one-page cheat sheet that is basically, you can download it for free. It's just a PDF that you can print for yourself. It's also in the description down below that summarizes all the wave patterns with some neat additional information. We very often reference that. You might have a hard time, depending on your screen size, to see exactly what I'm pointing at if you don't have that at your disposal. So really, if you want to learn Elliott Wave Theory, or even if you're already familiar with Elliott Wave Theory, download that PDF from down below. It's just a Google Drive link, so nothing scary or where you have to sign up or whatever, and print it because it's really, really useful. Now with that, we can actually jump directly to the screen share part. So here we have Motive Wave. Quick recap in terms of, so last thing before we start our timer, in terms of softwares you can use to apply Elliott Wave Theory. You can use TradingView, also linked in the description down below, which has basic wave tools, so it allows you to just label your own waves. Then you can use alternatively Wavebasis, which I'm not sure if we will link down below or not, but it's wavebasis.com. They are just join the free trial, and after the trial, if you don't want to use any of their paid features anymore, you can continue using the account with some limitations. So, but it's still nice because it offers some forecasting that not always, as we can see, is 100% accurate and so on. And but overall makes it easy to quickly get a second opinion from an AI in quotes to see how we're doing with labeling. And the ultimate thing to use for Elliott Wave Theory, in my opinion, is still Motive Wave, which looks a little bit outdated, but has super neat features when it comes to Elliott Wave Theory, like, for example, instantly telling us when we are violating rules in some way. And yeah, so that's pretty much it. Now, as usual, so first of all, I'm gonna quickly check, did I mention everything? Okay, we have, yeah, as always, don't forget, hit the subscribe button so you get notified when those streams start. And yeah, like enable that bell icon so actually you don't miss out on future streams, although I do my best to schedule them in advance. And last but not least, if you are interested in other things other than trading and investing and so on, I do also have a YouTube channel that focuses on cryptocurrencies and passive income. And outside of that, because I also have a personal life, I also have a Twitch channel where I'm live usually Sunday to Thursday in the evening just for some casual small talk and Xbox gaming. You can also check them out on all those channels. If you search for my name, Christian Rauchenwald, you will be able to find me. So yeah, that's it. And with that, last thing was the timer. So we're gonna stopwatch timer starting now. And yeah, timer is running. And with that, quick recap, not much changed in our SPX forecast. So as I said, we're still waiting to see if either that wave 2 here gets invalid by the price rising a little bit higher, which still wouldn't make us worry too much. Only, yeah, like anywhere in that area, even a little further would still be okay. And overall, my outlook is still bearish because we have a big wave 5 or wave 1 that ends here. And therefore, we should have a relatively big correction that plays out. We just might still be looking at waves of the wrong degree here. If you're wondering about degrees, so this wave, I'm going to zoom out. So we have one wave that goes it doesn't go down here, yeah, but 1, 2, or 1, 2, 3, 4, 5. And that then makes up, or let's start smaller actually. If we look at this wave, 1, 2, 3, 4, 5, it makes up this wave 1, and then this wave 1, or to be more precise, this makes up a wave 4. So like very bad example. So let me start it over now that you're fully confused, because we only have, which is also a reason why we're still using TradingView as well. If we go to the SPX here, we can see on the monthly chart that we have data back to 1870 something, yeah, 72. Whereas in Motive Wave right now, we only have the data from around 2009. And so talking about waves of different degree again, so we would have a pattern, an impulse wave, 1, 2, 3, 4, 5, for example, and that impulse wave then makes up this wave 1 of a higher degree. Whereas then again, this wave 3, for example, has to subdivide, might actually be more likely like this, but has to subdivide into another 1, 2, 3, 4, 5. And then that subdivides again, so into waves of lower degree. Yeah. So much for the recap. Yeah. Now with that, we're gonna look at Ford, and for that we're gonna enter. So quickly recap of the rest. In the Nasdaq, we have the same issue. We're not sure where that wave 2 currently will finish. Anything around that 0.4 is okay. So we could see a horizontal line if we put it here and extend it. So could still rise further, which might mean my portfolio might lose some more money in between, since I'm currently betting against the SPX and the Nasdaq 100. But yeah, I'm fine with that. So I'm not going to try to determine exactly where the turnaround will happen. It's still in an area I'm comfortable with. So we move on and just wait. Now for Shopify, there we will have to zoom out to get something. Yeah. So we have a similar picture that our calculation is okay. Let's move that Fibonacci retracement a little bit so that we say, okay, we have a wave 1, which again consists of 1, 2, 3, 4, 5, which means we are right now we were in wave 2, and we believe we're of the opinion that now we are actually in wave 3, which means over time, so considering that this year covers multiple years and that wave 2 is a year, so over the next couple of years, we expect to basically see a new all-time high here, which may or may not happen, but it gives us a good trade opportunity, in my opinion, because it means that we have little downside. So we have around 50% downside from the current price to that 0.2 at 23.63, with a potential 400, 500 or more % upside, because the wave 3 would obviously build a new all-time high in this case. Although again, we're talking about multiple years, but I'm fine with the risk-reward ratio here, so that's why we're still holding this. And while I was analyzing it 3 or 4 days ago, or like a couple episodes ago, I actually decided to double down on that position, and we now hold 2.6% or so in our portfolio. Let's check. Should be open here, and portfolio 2.36, 2.63% of Shopify at the moment. And yeah, so yeah, like right now there's a lot of red, of course, but if we look at my overall performance, yeah, you can see I outperformed the market since I've been opened the portfolio. But you can also see that as part of much higher or more than average profits, there are also then months that have like bigger losses. And this year just started out with like two of those months. And by the end of the year, we should be in the green again. Obviously, no guarantees, but since I'm also investing my money here, I'm obviously doing my best to get us there. Yeah, so Shopify said, based on Elliott Wave Theory, unless my labeling is completely bonkers, which could be the case, you know, like there's always an alternative labeling that might apply. But based on what I have here, I'm confident in that position that over the years, we will turn that into a couple 100% profit, even if in between, especially in the beginning, we might look at like a couple percent loss. So yeah. And then moving on to Black Knight, and there we have a similar situation. So we said, okay, that's 1, 2, which would indicate that we might now be in wave 3 already. And if that's wave 3, then again, we have the downside at 52, which is less than 10% downside right now, with an upside of actually more than 100%. Could, however, also turn out, so let's quickly, no, wrong button. Let's quickly throw some other label. So there we have it. So it could also actually potentially turn out that, yeah, cannot label it like this because it would be invalid for what we have in place. So let's undo that. But so yeah, it could turn out that basically it's A, we're right now in the progress of wave B, or this is A, B, and then wave C would be, where do we have regular trend line here, regular trend line. So if it then turns out like a big zigzag pattern, technically, and what do we have, 0.041, yeah. Although highly unlikely because, yeah, the corrective pattern, that's not a rule, and I have to look it up again. Basically, very often we retrace into the area of wave 4 of the previous impulse wave of 1 degree lower. So that wave 2 here would very often retrace again in the area of wave 4, which is here, of the impulse, previous impulse, this one. So 0.1 is the previous impulse of 1 degree lower would be this. And we pretty much have that here. So it's not a guarantee, but yeah, like things point towards that being another than 1, 2 or 1, 2 still in progress with 3, 4, 5 developing. And again, like relative little downside. So if we hit our stop loss, we only lose 10% of the 2.6%. So like 0.26% of the portfolio value, whereas the upside is actually more than 100% if we are right. Because if we are right, we would look at our so-called base channel using Kennedy channeling technique, which would make this basically here the base channel, and a wave 3 would mean a breakout of that channel to the top, which would right now already be more than 100 or more than 100% of the current price level. And then the actual wave 3 would then be actually 200% or more gain. Again, talking about longer time frames here, not as long as Spotify, because here we have our wave 1 basically from what do we have here? So sorry. That was what? That was October 2017 till 2018 to 19, 20, 21. So we have 4 years here. We have 1 year here. So potentially, again, could be 4 years development till we have that new high. Although, just to be fully transparent here, when it comes to time frames with Elliott Wave Theory, while there is a whole chapter on the time aspect in the book, that's something I haven't mastered yet. So, but basically, the wave pattern should look proper, yeah, like so the look of the pattern should check out, which means it's unlikely that we'll shoot up this instantly, because it would not check out as a, like, in quotes, good looking pattern. Therefore, most likely will take a couple of years for us to go there, or I turn out wrong, or turn out to be wrong, but either way, that's fine. Now, with all that covered, and we're already 15 minutes in, we finally get to look at Ford. For that, we're gonna look for Ford here and open a new chart with the same settings. And same time, we first, and again, that's why we are using also TradingView always in conjunction. Gonna open up Ford here, and here we see there is a history of 1968, and we have to consider that, because if we now switch here to the monthly chart, we might have less of a history available from our interactive broker source, which means then we have to first quickly look at TradingView to get an idea of what we're dealing with. Yeah. So also, don't forget, if you have any questions, you can obviously always leave them in the comments down below or during the live stream, or ideally maybe jump into the next episode of Daily Market Mastery and ask them while I'm online, so it's easier to really give you a proper answer. Yeah, but so that's the loading. So while that's the loading, let's actually look at TradingView. So if we look here and we can either look at it like this or like that. Yeah, if I would label it or would have to label it like this, we probably would start from here. I'm gonna explain in a minute why, and would have something like 1, 2. That would indicate 3, 4. I mean, that's really would need to zoom in more there. So drag and zoom in. So logarithmic makes more sense. Okay, zoom out. 1, 2, 3, 4, 5 could be, which then means that we would have again a 1, 2, although our retracement here is like really, really big. Now in Motive Wave, we finally have a chart. So zooming out, and we have data from, again, that's the hard part here. So we see from 1980, and again, there we had data from 68. So where are we starting? We're starting from 80 from, are we starting from down here? No, like something's not checking out here. So fourth monthly, and there it says 1980. And 1980 would be here. And then TradingView, one second. I hate that feeling when I think I'm gonna sneeze, but then I don't sneeze. I mean, it's better for all of you because I didn't mute the microphone, but yeah. So here we have our starting point in 1980, which would be 80 was here, so like a little higher. Okay, like that also explains why we have that then lower here, which means we actually have that here. And then why are we still lower here? So here we have, what do we have here? Let's take a horizontal line. So here we have around $1. I mean, obviously there were some splits probably in between, and here we have around $13 to $15. And if we compare that, here we have enable that damn magnet. So here we have what in 1980. So I guess really depends on where in 1980 we have our starting point. But if we take that low here, it says 0.79. So our data here might not be correct. There might be a split that didn't factor in properly. So that's why it's always important to double check. Now we're going to actually forward stock chart. Yeah, like get to maximum. Okay, that's the, and Yahoo Finance it is as a second or third source. Okay, let's disable Brave Shield. Are you reloading? Are you reloading? Okay. And no. So we have 84 here. And can we get full screen? Try later. And maximum time frame 80. So 133. So yeah, our data here is not checking out. So there is some split or so that the data sources that Interactive Broker is feeding us are not considering, which again is important to know, because if we look at this right now, it would be an invalid labeling, because we would have, if we start 1, 2, it would turn out to be invalid because point 2 goes below the starting point. Or we would come up with an explanation, which we're actually going to circle back to TradingView real quick to talk about why we would start from here. So in the history of every company, or in the history of the majority of companies, there is some story before the company goes public, which means the company already is doing business, they're already building their product or whatever, and then eventually they go public. And usually that going public happens around when the hype around the company is very high, which in terms of Elliott Wave Theory and talking about the mass psychology that it's more or less based on, means around the 5th wave. And after the 5th wave, we would usually then have a correction. Yeah, so if we have here 1, 2, 3, 4, 5, then we have A, B, C as a corrective pattern, for example. And so if we have before the public, or before them going public, like 1, 2, 3, 4, 5, that actually would turn into wave 1, followed, so 1, 2, 3, 4, 5, then A, B, C, and that would then be 1, 2, 3, 4, and now we would be in the 5th wave. Yeah, now that's the explanation behind why often, not always, when you have an IPO, you actually might have a little bit more upward movement, and then you have a corrective pattern, which would be going public around what would be the 5th wave, in quotes, hype around the company, and then after that we have the corrective pattern. Yeah, and then we have our real starting point where we can label. Now we could theoretically label and really say, okay, we assume that this was somewhere starting point 1, 2, and this is wave 3, 4, and now we are wave 5. Although then it would not be an impulse wave because we are retracing back into the area of wave 1. So that would turn out as invalid labeling anyway. But it's still, we picked basically in quotes, recent or very old low or high as our starting point. And when we label that, we could label that, and we're going to have to do it here right now because, like Motive Wave has the wrong data sort. We can actually check wave basis as well. So Fort, stocks, Ford Motor Company, there we go. And their all-time, and we get 2009, so there's nothing older than 2009. Okay, making it harder because 2009 we would basically start from even after that low here, which makes it tricky. But theoretically, we could label that whole thing as, for example, like it could be 1, 2, somewhere here, 3, 4, 5. Yeah, it's not a nice looking pattern, to be honest. So if we, like this, which would then mean that basically that whole thing here would turn into 1, 2, up, and we would currently be in wave 3, and then 4, 5 somewhere, yeah. And then here, looking at this point from 2008, we could have something like 1, 2, and again we would now be in wave 3, 4, and then wave 5 would basically finish that wave 3 somewhere. And in terms of corrective patterns, it also isn't that bad. So we definitely could hit something like ABC here. Here it might be a little trickier in terms of labeling it out. So, but it should be, that would then be a flat corrective pattern with a B making a new all-time high, or actually wave 1 goes till here. So it would be something 1, 2, 3, 4, 5, and then the corrective pattern is here. Either way, if we have data from 2.8, we have data from, do we have 2.8? Yes, we have 2.8. So we can zoom in, yeah, and we are basically now looking at, not too much, we're basically looking at it from here. Now let's see if our price is here correct. So if we say November 2.8 open 225, and November 2.8, 9, September, October, November, and open 225. Okay, so we are right here. And then we can just use the auto labeling, which pretty much will do what we did here. So I'm gonna delete everything that we don't need right now. So this one, this one, this one, and that line we don't need. So pretty much it says wave 2 is in January or March 20, which was the COVID crash pretty much. And here we have, similar. So March 20 would be our wave 2. And then basically we would be here now in a wave 3. And for that wave 3, we would also then have, as usual, 1, 2, 3, 4, 5, that then actually has to make up this wave 3. So wherever that 0.5 now went, somewhere here, let's see, yep. So assign that. Why do we have, okay, there we have brackets, there we don't have brackets. Okay, so those are the different degrees. And there we can also double check, or not double check, but we can use a Fibonacci retracement, because not always, but often, wave 2 will retrace 38.2 or 61.8% in that, so like roughly, yeah, it's not rocket science and not super specific, or like not, doesn't always apply, but we can see that we're in the area of 61.8, which would further be a point that says, okay, it's possible or likely that we have this 1-2 here, which means we would now be in a wave 3 movement here. And for that wave 3 movement, or actually would be in 2 wave 3 movements of different degree, we would have the first wave 3. So again, if we take a channel, Kennedy channeling technique, so the first would be based on this 1 and 2 with our high through 0.1 roughly here. And a confirmed breakout would indicate that we're in the wave 3 movement. I mean, we're not yet with a confirmed breakout that continues, but still. And then we would, if we zoom in again, and yeah, so sorry, turn that into logarithmic, so like this, and yeah, now it broke the channel, sorry for that. So do we have the high? Yeah, sorry, let's circle back. My mistake here for forgetting to switch back to logarithmic. It makes sense to use a logarithmic chart whenever you have like huge price difference between like here $1 and here we have like already $30, $40 and so on. But if we are talking about lower price movements, then a regular chart also does the job or is suitable. Now, it doesn't change the labeling in this case, yeah, so, but it will change the channel. So if we get the channel here, web channel, then now again, base channel for the first wave pattern. So here, again, make sure that the candles here are, or the, yeah, that's fine. And parallel through here. So we did not have a breakout yet, but basically that's our base channel on a bigger degree. Again, we are looking here at more than a decade, or a decade roughly. Yeah, a little bit more than a decade in years that passed. And now the wave pattern of a smaller degree. And just to clarify, obviously that wave 3 here would need to break out from here, which means then that this wave 5 here would also need to break out. Not saying that it will go there to exactly that point, but just that it has to break out to be a third wave. And yeah, on a smaller degree, we would then have that 0, 1, 2. And again, as said, we would have the Fibonacci retracement here. That tells us, okay, we are in the area where we would expect, yeah, like then a turnaround and the start of another third wave, yeah. And here we can then add another base channel, assuming that turns out right. So, so that would go like this, and with a parallel through 0.1, and basically, yeah, like we would want to see a breakout through from that channel for a confirmation of wave 3. Now, I'm not saying that it will happen in June 23, but I'm saying that based on the labeling, that is what should happen. Yeah. Now, moving on, obviously looking closer. So now we're still looking at a big time frame, and we need to get a little bit down. So as you can see, we usually work our way down to like 2 days, 1 day, or weekly. So in this case, we start with weekly. And it's possible if we look at how this here develops, yeah, or not only possible, but it's likely that our corrective pattern here hasn't finished yet. While I probably shouldn't have a lot of problem to fit some kind of ABC corrective pattern in there, yeah, it might not check out when we look closer. So, and considering that here we don't have a clear 1-2 movement, but this actually starts to look more like potentially a triangle. Yeah, so like this, which means then wave, wrong wave, I need that one. Wave 2 hasn't finished yet here. Now that's, we're talking about this wave 2 here, hasn't finished yet, which means that we're still waiting for, where did my triangle pattern go? Ah, it moved all of it, okay, so. And then, so we actually would, the triangle, yeah, that would be wrong. So that we actually would look then at a combination of a corrective pattern, so combination, and the combination would be like this. Whereas, and there we have to look now at the cheat sheet. I'm going to switch to the desk cam, just takes a second. So if we would have a combination, so first of all, we're looking at a second wave. A second wave is any corrective pattern and very rarely a triangle, although the cheat sheet says not a triangle. And there we have a 10% chance for a double free, and a double free would mean that we have basically any correction in the beginning, followed by any correction, followed by any other correction, in which case this here could potentially be and again, we probably will have to first look closer. Where's my icon thingy? Select, and then we probably go to also 2 days for now. So, and try to align those points with the actual candles that make the high points, and that goes there, that goes there. So if that were to be a double free, then a flat zigzag. Yeah. Okay. Sorry, I also have to switch back obviously to the screen share so you guys will see what I'm looking at. So I moved the I zoomed in closer. We are now looking just at the corrective pattern here. If that were a double or like a combination of a corrective pattern, it could be that this here is a zigzag, then would have another, probably not like this, but probably more like that zigzag pattern here. And then we would have Elliott wave triangle developing here, which would then leave our endpoint here, which means then that's where we would go up. Yeah, so which also means then if we zoom out again that this base channel here would be slightly wrong because it would also then be at that point 2. But other than that, now what does that mean? Because this pattern is now not confirmed and basically a little bit in the, I don't know, like, in the air, or we have to wait to see how it develops. Yeah. That means that basically using this as a definitive thing is not the smartest idea. So we'll have to rely on this here, which makes our trade a little bit more risky, because right now I would have my stop loss actually around here at around 1060, 1061. Yeah, but I'll actually adjust it and we increase our risk. So it will change it from a potential, let's check, 1061. So right now it's 16% risk that we have there, and it will change it to a lot more. So again, but only on the position, which if we circle to the portfolio, right now it's 1.3%, and now we have 68% risk of those 1.3%. So that position could at worst affect roughly 0.5% of the portfolio. While on the upside, so wrong button, sorry. So there's the browser window. While our upside would technically be north of 72. So yeah, like, which would obviously be, like north of 470%. So I'm gonna update that. However, because of the uncertainty, so while for Black Knight and Spotify, the labeling of the last couple of days actually caused me to increase the position, and from 1.something% to, let's circle there, up again, so, there, that one. So while we increased the Shopify and Black Knight Inc. investments and doubled the position basically, for Ford right now, with the uncertainty of this corrective pattern here, I don't see a reason to close the position, although, I mean, it's slightly profitable right now, but I don't see a reason to close it. Yes, our downside got a little bit bigger, but overall, it's still, at least so far, checks out enough for me that we have that long-term upside. And again, we're talking about years here to realize the profit, yeah. But I also don't see a reason to double down on something where we are not 100% sure if basically we have a triangle pattern where we will break out then from there, or where maybe that's not finished and will be A, B, C and actually correct further. But yeah, overall, like holding that for a couple of years, I'm fairly confident. Now with that, circling back to me, so using our timer, we're at the 30-minute mark now. We managed to recap what we've done so far. We managed to take a closer look at where Ford might be going according to Elliott Wave Theory. Obviously, keep in mind, I'm also constantly learning about Elliott Wave Theory, and I have by far not mastered it yet. Even the minds at Elliott Wave International are here and there not always in agreement, and there are always multiple ways to label things and so on. So yeah, like might turn out that my forecast is wrong or so, but again, then we have risk management in place. Anyways, for tomorrow's stream, we might, as said, look at GameStop. Probably we will, since I also hold a GameStop position still. Might cover a little bit more about why I'm still holding that. And then after that, we'll look at news, or yeah, not new stocks, but at stocks that I'm not invested in right now, to ideally identify situations where we have basically wave 1 and 2 completed, with just being in the beginning of wave 3 to take advantage of huge upwards or downwards runs if we can short it. And yeah, so that's it for today. Thank you all for tuning in. If you watch this live, if you watch this as a recording, also thank you for watching it. Make sure to subscribe so you don't miss the actual live streams. And then see you all tomorrow with episode number 9 of Daily Market Mastery.